Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Matterport, ticker symbol MTTR. And so I am recording this in the pre-market on Wednesday, February 21st, and Matterport reported earnings yesterday after hours, and following that they took a little bit of a spill, and so I just kind of wanted to go over levels that stand out to me as either buy the dip opportunities or just kind of wait and see levels. And so yesterday Matterport did close at a price of $2.54, and that was actually hitting what looks like to be a double top. On February 12th, they hit a high of $2.54 with this big wick up. So it did look like we were going to kind of, encapsulate that prior wick, but we did get a close at that exact same level. So that wasn't really showing a lot of strength. And also, when a stock is leading into earnings, if it is running up a bunch, that could be kind of like a sell the news type of scenario when, prices going up a bunch, earnings might drop the stock. Whereas if the stock price is going down, it's quite possible it could rally up. But earnings are really tough to predict, so I tend to not really make too many trades around them. But I do like to speculate. That is fun. But so with Matterport, they were up almost 3% yesterday on February 20th, but then in the after hours now we're down more than 10%. And so, I just kind of wanted to go over the levels here that do stand out, and also do want to mention this before I get into the chart, is that Matterport stock falls after they got a miss on sales in the fourth quarter of last year, and they do have weak guidance for this year. So not looking so great there, but really, business is business, and you just got to, keep moving forward. And so that's what I'm going to do here, looking at the charts. And so here, what I've done is I do have this Fibonacci retracement here going from the low on January 19th up to the high of February 12th, which is also the same high as February 20th. And with that, you can see this blue line just above the price. That is at $2.56. And I had mentioned in the rough cuts request that there would be a lot of resistance up there. And so, unfortunately, that's kind of what we saw. We did see, price going up to $2.54. And I will look at the after hours and pre-market pricing in just a second. Price did nearly hit there. And so, was rejected. And levels that it might be pulling back to, let's see, actually, I'm just going to switch over to the after hours and pre-market pricing. And so we can see that, price did actually wick up to that level, not yesterday in the after hours, but actually yesterday in the pre-market, hit a high of $2.58.9 just before, the market opened. And so the high yesterday after hours was, it looks like, $2.55, so almost hitting that gap, but still, none of this is during market hours. And we can see, based on all this consolidation that we were getting around that level, that we do see this nice big volume shelf there. And then looking at this to the downside from these Fibonacci levels that I have, also the two purple lines, it does look like price dipped down to about $2.15. Which is just above this 100% retracement of the Fibonacci down to a previous low at $2.14. I actually find it surprising that this wick only comes down to $2.15 because I have been placing, pretty small orders at these levels, and I got one filled at $2.14. So kind of surprising that wick doesn't show. But that wick does come down to right around that level, $2.14, and the open of this candle actually does look like it is at $2.19, which is exactly at that purple line there. But yeah, I'm just going to take a step back looking at this on the daily time frame so we can look at these levels, get a better, bigger picture idea. And so, basically I do have these two lines that are purple, one dashed and one solid. I will go over why I made that dashed in a second, but I just want to go over these fib levels. And so looking at them, we can see that this low, $2.14, does seem like it was a good dip buying opportunity, apparently, even though the wicks and candles don't show that. But looking at price in the pre-market at $2.24, that is, just between these two levels, the lower side of that being the 786 of this retracement at $2.22.6 or $2.23. And then on the upper side of that, we do have this purple dashed line at $2.25. So, right around there does seem like a pretty good key level. If we were to go to the upside, then that would be the 618 at $2.29.3. But I'm not really going to go over these higher levels just because, we are kind of looking to the downside, seeing where we might find support rather than resistance. But clearly, what does look like we might be seeing some resistance right around here with this volume shelf having this consolidation over there. It's going to be tough to get through there. So resistance with that might be around the 50% level at a price of $2.34, corresponding with the base of this volume shelf or this lip here that we see. But then getting above that, levels that might actually act as support could be the 382 at $2.38.7, but really especially when we get back to the 236 at $2.44.6, that could really start to be support again, but it's going to be tough to get there, and I do think that we might see some further downside, especially once the market opens. And so taking a step back just to go over that volume shelf and the purple lines that I have marked there. And so really, why I dash this upper line is because over here, you can see that's where we start to see these wicks coming up. So that's where we're going to start to see support. And that does correspond with this pickup of the volume shelf here. But where that really sticks out is right around that solid purple line. And that is really where we have a lot of consolidation, not just wicks, but a lot of solid candles there. And so that should be acting as support. And so those levels, like I had mentioned, the dash line at $2.25 and that solid purple line at $2.19, I think that's really going to be a key level of support. But if that doesn't hold, if $2.14 doesn't hold, we can look at the extension, the 1618 extension from this Fibonacci retracement, and that comes down to $1.89.3. And so I do think that is, like worst case scenario, and that is pretty similar to the lows over here at $1.84, but I don't really think price is going to get that low. I do think that what we're seeing is kind of an overreaction and that we will start to see price rebound. But if price does continue to go lower, what are some other levels that we could look at? And so I did this other Fibonacci retracement going from the bottom to the top. So that is suggesting where we might be finding support. So that's coming from 184 here that was hit on October 23rd, going up to the high here on December 26th. And, so from that retracement, I just highlighted the levels that do stand out. One of those being the 786, that is at a price of $2.08.6, and also that being just around the psychological level of $2. But if we do look at that corresponding with the candles and wicks that we do see over here, that does look like it is getting to the top of these wicks here. And so I do think that will be the beginning of some support, but really just coming down from there, I would think of that as like this dashed line, the beginning of support, and really like right around $2. That is really going to be like the meat of that support. I do think that that will definitely serve as support before we get to this 1618 extension. So do keep that in mind. But, I do also think that if we do dip lower than $2.09 and we do come down to $1.89 or so, I do think that this level will actually serve as a lot of resistance, because not only do we have this consolidation here that, if we're above it, that's support, but then we start to see this consolidation here, and at that level, that is coming from the underside of that consolidation, so that is then going to act as resistance. But, I don't want to only be talking about, the extreme downside, what we might be seeing. I do think there is some hope that this goes higher and potentially fills this gap maybe in the next week or two, who knows. And so another level to the upside that we could be looking at is based on this Fibonacci retracement, and so that is the 236, and that is at a price of $2.71.8. And so that is really, where this volume shelf here, this big shelf that we see that we're kind of in the middle of right now, once we get to the top of that and this starts to dissipate, that is right around that 236 level. That does seem to kind of, mellow out around $2.70. So I do think that if we can get above that level, and if we can get to this orange line at $2.74, I do think that those levels will be acting as support that could serve to launch us to higher levels, like potentially getting back to filling this gap at $2.82, or taking out this high here at $2.98.9, or really just getting back to $3 a share. Yeah, so I mean, I think it, sucks that we've taken a tumble following earnings, but I do think that, long term, this is going to represent some nice buying opportunities. I just think it's good to, be basing those on levels that, are sound and could be acting as support rather than just throwing in all of the money all at once or, all of the time. I think it's good to just dollar cost average on levels that, could be acting as support. And so, that's what I'm doing. But, you do you. And, of course, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below. And as always, make sure you subscribe and share with others to make sure they subscribe too. Thanks a lot for watching.